Why did my credit score drop after paying off debt? Wiping out a debt is always a net positive, but be prepared for possible side effects on your credit score. What's going on, y'all? It's your man Adam Ace Spencer here with another credit video. And today I want to dive into this article that breaks down why your credit score may drop when you are paying off debt. Oftentimes people, are in this funky scenario, this funky situation where they are trying to build up their credit score and face this dilemma where occasionally, more often than not, your credit score will have a period of time where it's going to fall because of you paying off your debt. So we're going to break that down in this video. But before we do, don't forget to like this video. It does show me that you guys appreciate the time and energy I put into doing the research and, putting together these videos for you. But also subscribe to the channel. Hit that notification bell so you can stay up to date on all of my latest and upcoming video content. Making a final debt payment can feel freeing, but it won't necessarily bump up your credit score. Worse, it can actually cause a dip in your score, as counterintuitive as that may be. To know why, it's important to understand the factors that make up your credit score. Shouldn't paying off debt help my credit score? To be sure, creditors want you to repay them when they lend you money. So it seems reasonable that paying off debt would help your credit score. But that's not exactly how credit formulas work. Credit utilization, the portion of your credit limits that you are currently using, is a significant factor in credit scores. It is one reason your credit score could drop a little after you pay off debt, particularly if you close the account. Having low credit utilization, 30% or less, and the lower the better, is good. Other factors that credit scoring formulas take into account could also be responsible for a drop. The average age of all your open accounts. If you paid off a car loan, mortgage, or other loan and closed it out, that could reduce your age of accounts. And that's also true if you paid off a credit card account and closed it. The types or mix of credit you have. Scores reward you for having both installment accounts with set payments over a specific time, like a loan, and revolving accounts with varying payments and no set end date, such as credit cards. Let's say you just made the final payment on your credit loan. Your payment history is perfect, and you keep credit card balances low. Let's say you just made the final payment on your car loan. Your payment history is perfect, and you keep credit card balances low. But now you have one less account. And if all your remaining open accounts are credit cards, that hurts your credit mix. But you may see a score dip, even though you did exactly what you agreed to do by paying off the loan. The same is true of credit cards. Usually, paying off a credit card helps lower your credit utilization because your remaining balances are a smaller percentage of your overall credit limit. But if you close the account you just paid off, you lose that account's credit limit, and now your other balances represent a greater percentage of your total limit. It's smart to keep on top of the factors that influence your credit score, and it's easy to automate. How to pay off debt and help your credit score. Focusing on credit card debt first can help you budget because cards tend to have higher interest rates than installment loans. It also helps your score by lowering your credit utilization. Credit utilization is calculated both on a per card and overall basis. If you have any credit cards that are anywhere close to their limits, make it a priority to lower those balances to no more than 30% of your limit, and lower is better. As I always say, my friends, specifically 10% is the goal. Keep it below 10%. Now keep these credit building habits in mind. Pay on time every time. Late payments can seriously damage credit. Keep credit cards open unless you have a compelling reason for closing them, such as an annual fee or poor customer service. When you close an account, it can reduce your average account age. It also cuts your available credit, which sends utilization up. Use credit lightly. If you no longer love the card, consider putting a small recurring charge on it and putting it on autopay. That way, you don't miss paying the bill and the issuer won't close the card because of inactivity. And that's actually exactly what I do with most of my cards. Take an overall view of installment loans. Don't keep an installment loan open just to avoid score damage. You're costing yourself unnecessary interest. How do I keep my credit score from dropping? Once you've gotten your balances to zero, here's how to guard your credit. Make it easier to pay on time. Set up reminders to pay bills. You can set up calendar reminders or get emails or text alerts from most issuers. Watch for credit report errors. Any attempt to build your credit will be fruitless if the data going into your scores is wrong. You can get free credit report information two ways. Some personal finance websites and credit card issuers offer report information. And you're entitled to at least one free report directly from the credit bureaus. The reports you can get annually, weekly through April 2022, from the three credit bureaus can run to dozens of pages. You can see an error despite it. Someone else's file mixed up with yours or identity theft could potentially and unfairly hurt your score. The sooner you address that, the better. And don't apply for multiple credit products in a short period of time. Opening a new credit account lowers the average age of your credit accounts and involves a hard inquiry, which can result in a small temporary drop in your score. If you can, wait at least 6 months between credit applications and do your credit card research before you apply. Practice patience. Sometimes the best thing you can do for your credit is wait. A combination of patience and good habits will help any credit score bounce back. Most credit mishaps fall off your credit records in 7 years. So, my friends, really important information here that we just covered today that I thought would be helpful for you to keep in mind as you continue to work on improving your credit score. Is, of course, not as simple and black and white as everyone always makes it out to be, because everyone's in a different situation. It's not a one size fits all approach in terms of what is best for you at at this particular time, at this moment in time. And sometimes it might be something where you have to focus more on other priorities than trying to get your credit score as your top concern. But keep in mind that the access to credit cards, and maybe you're like, well, I do have a credit card now. Well, maybe you're someone who has a high interest rate on your credit cards. Maybe you're paying 30, almost high 20s and stuff, and the goal would be to get it lower to the mid low 13s and even lower. And all of that, again, is going to benefit you in the long run if you are utilizing credit cards, or even just simply the matter of getting reward points and just putting that credit card to use and paying it off in full every month. Again, not that complicated, but life, unfortunately, life is life, and it's not always as simple as we would like it to be. So I completely get it. And that's why, I continue to create these videos to help you guys with building up your credit score. And so I'm taking you guys with me on this journey. I want you guys to see, as my score fell down a little bit recently, and we're already building it back up, and it's already making progress, heading in the right direction, hopefully to new all-time highs for me, and I can reach my goal of 800 and surpass that, right? Get into that 800 club. So I have my work cut out, of course. I have a long ways to go, but like I said, we're continuing to move in the right direction. And knowing that I was down in the 500s and now I'm in the 7s, hey, I have no complaints. I'm not going to bring up anything that I can complain about because I'm incredibly grateful, but also motivated and hopeful that you guys will, eat off of some of this game, some of these tips, some of these tricks that I am sharing with you when it comes to building up your credit. So on that note, feel free to like this video if you haven't yet. Also subscribe to the channel and comment down below if you have any questions, any thoughts about why your credit score may have dropped recently. If this video didn't clarify, any of that confusion. So much appreciation for watching. You guys already know though, I gotta keep it moving, but I'll see you in the next video. Peace.